Hey guys, how are you? Yep, the curse of managing the unknown. A fascinating time in crypto. But before I get into the detail on all of that, our last free webinar run for some while, our last live free webinar coming up Wednesday, by the way. And I'm going to have to post the unique link for it because it's no longer even available on the website. So if you want to grab that, you certainly can. And it'll be one of our last live free webinars, and we'll break with that for quite a while. We're going to be talking crypto with you today. Yes, developments, interesting developments. And yeah, managing for the great unknown. It's quite interesting because yesterday I felt for a number of reasons that there was indeed something coming, and the only thing I didn't have the confidence or clarity on was directional. We've clearly been in a low volatility period for some time, and also volume engagement was getting really low. So a couple of tweets on the Crypto Sniper. If you're not already following, do grab a hold there and follow. Here it is here. So I'm talking about this particular part one, I suppose, talking about BTC. So currently low volume. This was as of yesterday. Low volatility, tight trading range. Yes. Peak boredom. I was even finding it boring to check in. So I can only imagine about people that are waiting for things to move, how they might have been falling. There was quite a bit of peak bottom calling as well, with regards to what people were going on. Usually that happens, often incorrectly, but sometimes correctly too. Low ebb leverage shorts and longs. In other words, when we look at Bitcoin, the shorts and longs on Bitcoin, in fact, the participation level in leverage. So I posted that chart. Might have to get it again for you, which showed both the longs and the shorts on it. Both had come down immensely and was at a very low level of engagement. So it confirms a kind of disengagement. That was happening. This is a major precursor before a key significant event or move might take place. And that's essentially what I was highlighting yesterday. And a highly expansive event is building. And so there was, and so it proved to be, and it popped this morning, and I'm afraid I made nothing of it because I wasn't confident about direction. And this is the tricky part about a lot of it. What most will miss, and I'm one of that most, a high RRR trade, and it's happened. And I had a feeling that it was coming, but I didn't have the confidence. Generally, we tend to bias with continuation, which given the last for that time frame under review would have been probably to the downside, but there were lots of signs of bottoming as well. This is where the directional confidence wasn't there. So if I just clear that, what else did we say yesterday about the crypto market? So that was generally quite bearish. Part two, most will miss the high RRR trade as we did. This was the Bitcoin chart on, no, actually that's XRP. I'll come to that in a second, in fact. So let's have a look over here. Part three, the concern I had for crypto generally, because Bitcoin looked like it could be bottoming, but it could also smash down through a bit of a grind line that we'd identified. So the direction was, we weren't feeling confident which way. We then looked at the next two biggest alts. And what we found is both Ethereum and Ripple had a disproportionate retail leveraged longs. So there were 8 times on Ripple and 5 times on Ethereum. So our view is particularly those two would underperform whatever happens, because generally you get the underperformance there. Whilst the move did turn up, the way to have been neutral here would have been to have traded Bitcoin against either Ripple and or Ethereum, and in both those cases with the bump in Bitcoin, you would have actually done quite well. So there, for example, is the sell-off in Ethereum relative to Ripple. Even though they went up, you can see that Bitcoin was the key winner. So we were highlighting on that aspect, we were accurate. whatever happens, goes up, goes down, Ethereum and Ripple to underperform. This helps where we had some of the pieces put together, but not all the pieces, the relative performance. And so that grind line in essence is broken. It was very similar for Ripple BTC. In all our looms I've been highlighting with my premium community that in fact we are convex here, and this represents a slide down to the downside for Ripple against Bitcoin. That accelerated right there with yesterday's activity. So these two alts are relatively weak. Let's just have a look at the coin market cap, because now we've got to say, even though they're relatively weak, the whole category class went up. So again, if we highlight this, if you look at the top 10 over here, you will see, let's cut it off at Cardano. Cardano is a double digiter. You've got 2 8s on Binance and Stellar. You've got almost a double digiter on Litecoin, which was also showing a little bit of a small amount of rounded top against Bitcoin, by the way. Let's just quickly show you that one. We did highlight that to the community, that Bitcoin was looking relatively stronger. So while I wait for that load, I'll go back to here. But still close to 10. The two weakest in the top 10, so let's cut off there, or let's include Tron. It's quite topical. We'll go to the top 11. You're getting basically 11%, double digits. Tether obviously shouldn't be a mover. Stellar 8.5%, Binance Coin 8.5%, Bitcoin Cash 7%. But the weakest two were in fact Ripple and Ethereum. That's weak when they've gained 6.5% and 6%. On the market's move today. But the key benchmark is, of course, crypto, Bitcoin King, and God markets essentially 13%. Let's try write 13 properly, shall we? 13% for Bitcoin. So 6.5 is actually a beta and alpha performance of -0.5. In other words, you're 50% behind your benchmark for both minus those two. So they did underperform, and those retail longs are probably the reason. Too many people already in that trade. So we're learning a lot about what's going down at the moment with the crypto market, and the move ended up to the upside. Let's have a look. So let's going back to those tweets. In fact, we're analyzing it. This was the chart that I put up for Ripple that was just highlighting that. Let's draw and scribble again on it. I've already annotated this. If you're following the Crypto Sniper YouTube channel and or the Twitter at the Crypto Sniper, you'll be getting that. But in essence, 65 million retail longs. So your blue line up top there is your retail longs. And at lows, the orange line here, so this is your Ripple down here, that level is your 8 million shorts. So in actual fact, you're 8 times bigger on leveraged longs than you are shorts. So there is a net retail long of 60, almost 65 minus 8. So you're at about 57 million Ripple leveraged net long. And this is all we can do. We got that nasty grind line there. Note by the whenever we've had extremes, we had the extreme, the one exception, too early a call. They're very low on the shorts, very high on the longs. That was roughly here. It was a bit early, but then eventually you got your crash. So that call was a bit early. For that as an indicator. Here you were extreme long and you were extreme short. That coincided with that relative high. You went down, 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 and down. That was a great call. This, as I say, was a good one, but a bit early. This was an absolute blow-off runaway market. And calling a top when you're going parabolic, you just have to be a couple of days early, and it's going to be a bit expensive. The other extreme high here were the longs, and relative extreme low on the shorts was over there. That coincided with that relative high, and you went down there. It wasn't as extreme, and you got a decent move. It wasn't as big, and now we've been at this level and that level, which is pretty huge in terms of the extreme. And despite the crypto moving up as a whole, again, I would highlight Ripple and Ethereum are relative laggards in the alt category. So yes, the market went up. and Ripple went up, and so did Ethereum. But any sign of weakness, and I think they're going to be pretty exposed in terms of that. So that was what was highlighted yesterday, not to be in those two if you were deciding to go along. We were cautionary on long, but we were also looking at the bull scenario. So this was the bull scenario that we considered. Just need to get to the tweet chart. I was referring to a bit of an Adam and Eve bottom, which is the sharp man's glutes versus the rounded lady glutes sitting on the bench there. An interesting particular example in its own essence. So here you go, that, and then the rounded version of the bottom. Got some birds coming and fighting outside my window. You can't argue about that, can you? Bit of spring weather. The concern was this grind line, but also this can be drift buying. We call this drift buying as well. When you have a reversal, what tends to happen is you melt up away from that. It's the minority option. It doesn't happen as often, but when you're getting turns, when you get a grind line, usually you either break the grind line. That's more typical. Classic example was there in our inverted structure there. But when you're in a reversal period in a construct, you actually melt up away from that line. So that's the minority option, but it occurs at key points where there might be reversal. So we highlighted that to the community yesterday with a bull example. So this is an example of what we talk about internally. As I say, no claims here. I was too conflicted. I actually got out one wallet that I wanted to buy some Bitcoin on yesterday, but it wasn't a trading account because I started to feel the smelling of spring for Bitcoin, but I got distracted, didn't do it. So I wasn't strong enough motivated. This was our loom from yesterday.
Relative low one, which is base plated. This would be relative high 2. That would be relative low 2.
I put it on turbocharged rate. I think 2x is maybe a little bit too much fast Francis. What I'm actually highlighting here is that within this, we actually have an upward leaning upside HVF structure. So after clarifying my potential concern on the bear side, this was the bull argument. We have to retain balance, and this probably turned out to be the scenario that ended up happening with the break this morning. Let's listen again, and hopefully it's not as fast.
But what I'm doing is I'm angling this whole thing up. So what we're essentially saying is impulse 1, impulse 2, and then impulse 3, where that would be essentially a relative low 3, and that would be a relative high 3. So we have a kind of three-way, three impulses of extension. Maybe I should draw this one and try a little bit better on the second, because that was all basing out on the base plating out.
I'll leave that. I'll just go into more detail on that. This is part of our internal content for Premium yesterday, which ended up the scenario. If we draw it again over here, I'll redraw it again over here with the actual live chart. Now you know we have the break. In fact, there was, this does seem to be the scenario. We had discussed that you might get what we refer to as an ascending HVF and or the three clear-cut impulses in something that is leaning upward. Often this is where a market has been oversold and there is dominant drift buying coming up quite quickly underneath. Either that relapses and you break the grind line to the downside, it's not strong enough, or it's the early advance party of a major push up and wave. And that secondary scenario seems to be the one that has effectively played out here. So if we look at it, and the news on that is it has already made its upside target. So in essence, if we have as a relative low from our 6,500 final low, that therefore is for now, if I draw my little bear, the final death point maybe potentially for your bear. And there he stands and we bury him. And yeah, it's a little cross because he was a Christian bear. And then you get your first major move that is snap back. That becomes the first move in a potential upside. Then we got a very moderated falling wedge for a sustained period with a double bottom, a base over there. So that gives you your slow calming back down. So falling wedges show that there is drift buying on the dips, drift buying. And I think this is the theme of this whole period. And then further support fails to make a new low and you get another impulsive squirt. We then went into a rising wedge. Again, a bit too much zealous buying along there. And that's where you got your slap in the face warning. Boom. Again, it was at a previous funnel level and the around the 4250, 4300 mark. So you can see that line, if I draw it all the way through, as being a key level of significance. There, it was kind of support there. We didn't quite make it there. We made it again there, and then we were leaning upwards. After that sell-off, we didn't get further continuation. Again, drift buying, marginally lower lows, and then we went into the drift buying again. And then that sell-off was in a falling wedge, which again shows that there's tactical retreat buying coming up under this. This, in essence, now, if I clear that for HVF method, close it so that we can clear it, reopen him. Essentially, we got our three impulses. So that was the change in trend for now. And we have our first impulse, our second impulse there, and our third impulse to there. That gave us green level, our traditional entry there, and our stop entry there. And note this lovely little performing micro HVF. I say micro, it's a mini HVF that did make its target. That funnel level is essentially at the funnel level of this. And if I move this out the way, we did make targets in one big spike. So that was a hyper spike, and you've made targets in a single run. And we missed that trade. Why? Confidence about being too aggressive. When you get drift buying, is it going to be strong enough to keep coming? And is it just the advanced party on a wall of buying, which was the answer here? Or does it pre-exhaust and you first have a snapback through that grind line that I've just drawn there? Should use more colors. They're looking a bit the same. So that's in essence your HVF. That was our thing, and that's target made if in there. So the case is, okay, given all that, we've explained what's happened. We weren't confident enough on direction. We were still cautious for the bear side on Bitcoin. And we were certainly on the relative strength side bearish over outright performance to other cryptos on Ripple and Ethereum. What was the trade? In the end, we did nothing. And when in doubt, leave it out. No bad problem. You don't make money, but you haven't lost any. There's always new opportunities. There's always a scope for patience. Something just to bear in mind for those that get too aggressively bull, be cautious. There was a big sell-off wick over there, a fairly big sell-off wick that has occurred. And the overall volume in terms of comparison to sell-offs is still not as huge as in other events. So it's a good recovery, but you don't go, it's kind of like when you're sick. It's not a binary thing. You're healthy, you're sick, and then you bounce back straight away healthy. What happens is you gradually get better. Everyone is like bull or bear. That means it's violently bearish and selling off, and then it must be suddenly really strong and bouncy. What actually happens is recoveries take their time. Just in the same way as your health recovers, takes your time. You feel somewhat better each day, and slowly you build some spring back in your step. If we were to have a look at this, it's a good candle to have, but just keep in perspective the volume that supported it and compared to other periods. We'll see what happens. There has also been a bit of sell-off at the 5,000, so there has been some resistance. The next major levels, which we know quite intimately, with the break of November the 14th, which was a very profitable period for us on the short side, is going to be up there. There was also a little bit of structure in there, so there'll be a first little test potentially there. So this is an interesting revisit those areas. We may be coming to that, and it's nice that the narrative is slightly changing here. So we got that, and then we've gone up there. How much do we hold? It would be a great shame for a large amount of that candle to give back and it to be a spike that needed to be sold off, and we come back and we conjourn. We want clarity of where the move is going, but this is a sustained period now since the collapse and since the low. I think the final low was around about mid-December. Since that, we've kind of been in a recovery, but it was unclear whether it was going to be sustainable. Now we sort of have a rounded bottom, and as I said, sort of the Adam and then the more rounded Eve type bottom, and a little bit of cup and saucer for those kind of fans. That's all baked into the ascending HVF structure, which is far more informative than all these other patterns like double bottoms, cup and saucer, etc. You get real targets, you get interims, you get a proper squeeze, and that's why we trade what we trade, and that's why your value out of community. So we didn't nail it, we didn't trade it, we watched it happen, we looked at a scenario where it might succeed, and we did actually pick it, but we were also watching the bearish side. So, you know, full disclosure, I was also concerned that it could be a sell-off through the red line over there. So no great success apart from just, it's now given us the new information in terms of what we expect, and it's highly informative. I would stand by the relative strength assessment on Ethereum and Ripple is proven. So I think that part was accurate. I think directionally I was both bear and bull and not able to trade. This is a chart on bullish dominance, Bitcoin dominance, and this was one we suspected was going to fail. So the last crypto that I did for you, I spoke of a number of scenarios where Bitcoin was relatively underperforming, and we pointed out that there's potential. This is Bitcoin dominance, its percentage of market cap. And inside our community, we actually were rolling back a little bit from this because we had already seen that it wasn't breaking with any great momentum. And in fact, it was forming a falling wedge in the structure, so it could fail. And of course, this is now the snapback. So when I look retrospectively, it seems you always have all the pieces, or you had a lot more clues than you realize, but you're not able to always weight the right things the right way. So you've got to get over it. Forgive yourself for missing the trade. Sometimes people get really irritated and they want to correct for it and chase in. That's not the action. Observe, post-mortem, what do you learn from it? Some things you got right, some things you weren't sure of, and that's the right course of action. When you're not sure, leave it out. If you didn't have the time to analyze it in the conviction. So what was I saying on Bitcoin dominance? This structure was going too slowly for us, and in fact that was forming what we consider to be a falling wedge. And a falling wedge sets up an impulsive break to the upside. So the possibility of this actually either failing or proving to be a once-off spike that could then drift down and fizzle. It could still succeed. Difficult to visualize right now, especially with the Bitcoin leading it, and some of the next two biggest alts by market cap. You've got 15 billion there and knocking on 14 billion there. The rest are all fours and threes down. You know, you got your two giant alts, still very small relative to Bitcoin itself, but they are the rest of the percentage in the Bitcoin dominance looking to underperform. So the possibility here is that this fails unless Ethereum and XRP as the big guys start to overperform Bitcoin a little bit. It looks to me that this will fail. That red line will be run. In other words, Bitcoin's the boss. Bitcoin is giving the rest of the market permission to go up, and it is leading the chase. That's why I was reluctant to call the end of the bear when I did the Bitcoin dominance, because I saw if Bitcoin's fizzling and the alts are going up, it was a confusing scenario. Now we're actually having Bitcoin reassert in dominance. It's easier to see a bull market. After a nasty bear, it's the giant that leads the recovery. It has to be driven normally through the giant. It's not typically alts. Yes, we've had periods where alts have overperformed and led the crypto market, like a Litecoin did. Litecoin was the first in this bottoming period, but it's very much like a Bitcoin substitute, quicker, faster, but various other aspects. But it's not official until the fat lady sings, and the fat lady is Bitcoin. Everyone always said Bitcoin's the man, and the others have a gender. Who knows? We can argue about what gender each coin has in a different discussion. But that's the take. My suspicion is that this Bitcoin dominance level will need to fail if the bull market is to continue. If it doesn't fail and it fizzles back, that will probably mean, it will probably mean Bitcoin is giving back some of its gains, or the alts all suddenly wake up now that Bitcoin is spoken. Bitcoin keeps going up slowly and suddenly the alts all surge. And this will require the two majors as well to surge, because they are such a dominant part of the rest of the alt market cap. To pick up billions, it's easier for Ethereum to go up 5% than one of the smaller cap ones to go up 100% and to pick up $1 billion. So we need for the alts to show dominance, and for this to come back down, you would need Ripple and Ethereum. And right now, they've just had a chance and they've done only half what Bitcoin has done. And remember, Bitcoin's a huge market cap. It takes a big move. If there's a second stage to this, and some of that Bitcoin money then trickles into alts again, then maybe Bitcoin will get some new money in, but also be letting some of its purchases bleed out into some of the alts. That remains to be seen. We'll have to wait and see that. That's a possible scenario. So, yep, that's my take on the crypto. Some life again in the market, which will get people engaged and interested again. Does start to look like a potential rounding bottom. This reduces the odds. It hasn't yet invalidated. You know that possible $1,000 thing that sounds so far out and long way away? It isn't entirely off the table, but it's certainly looking like you've got, for this time frame under review, which is a big time frame now, daily time frame, the beginning of a rounded bottom. This is also first set up in a possible new trend in terms of our HVF context, which, if I clear that and put it back out, actually means there can be overperformance to the upside in that. Even if it's made its target now, it can rest for a while and then continue back. These will be your key levels in and around those levels there. And of course, the 6K coming up to the 6K level will be a major one, because that was a significant failure. Also, those ETF things, who knows what news might win. I haven't been able to identify any clear-cut news. I'm sure there'll be speculation to try fill it in, but we don't fully know. But watch out those two core alts. So it does seem like Bitcoin might be the trade, but I wouldn't chase in here. Wait for a retreat. Why? After making a major target, we're going to have the Americans wake up, everybody wake up and see Bitcoin's move. They're going to, some of the weaker hands are going to FOMO in. Be very careful of not to be part of that. You might see a little bit of a relapse that will give you an opportunity to get in a little lower. It isn't going to go 100% necessarily into a further melt up from here. Don't make that assumption too easily. Let's have a look at it on the shorter time frame. It looks more impressive. People think they've missed out, and sometimes they do silly things. Whoops, let's go for that 15-minute. There you can see it. That is not something that you should chase. I think there will be opportunities later, and it's better to manage that risk. Remember, where would your stop be? Somewhere down here. Somewhere, whoops, we don't want a picture, somewhere down the low end here. So that's it from me. Long clip, a little bit of a take. We felt there was a big move coming. We weren't comfortable on direction. The relative strength assessment was accurate. The Bitcoin assessment was not confident enough, and sometimes that is what it is. You don't get them. You don't get them right every time. What to do next? Wait for an easing back, and also play relative strength potentially of Ripple and Ethereum. But don't also chase in now, because that will also settle back down a bit before maybe beginning expanding again. So don't chase Don't chase the trade after the event. Wait for things to settle a little bit. Okay, bye for now. Remember that webinar, last live webinar that we'll be doing on learning to trade in all directions, building wealth across traditional markets, across the crypto markets. Learning to defend and going also into attack, both in sinking markets as well as rising markets. If you want to attend that, that'll be one of the last live we do. The link is in the notes. Bye for now, and I hope this is useful. In essence, a post-mortem of an opportunity that has probably passed us by, but has given some clarity on direction.